What is going on, investors? Hopefully you guys had a great week out there. That is right. It is Friday, and it is time for the FAANG Stock Recap Show, where every Friday here on the Investor Channel, we recap all the news that happened with all the major FAANG stocks, plus Microsoft and Tesla. Now, before we get into the news, and there was quite a bit of it, especially from a technical perspective, which we cover at the end of the show, I want to make note of one change it looks like on earnings. We've got Facebook going from the 28th to October 25th. Now, these dates can always change. The CEOs and executives of these companies can get invited to a conference, or in some cases go testify in front of Congress, and the dates can change. But as we're leading into these, they start to become more finalized. Facebook's looking like it's the 25th, Apple and Amazon on the 28th, NVIDIA still over a month away on the 17th of November. We've got Google and Microsoft on the 26th, and we've got Tesla kicking things off on October 20th. So we're literally less than 2 weeks away from the start of FAANG earnings, and it should be exciting. In fact, next week we've got bank earnings. Things should get exciting here in the stock market, in my opinion. Now, let's kick things off like we always do with the news with Facebook. I was like a hungry guy sitting down for dinner. These stocks pulled back into areas that we have not seen for a little while and looked like they were going to dip into correction mode. But what's happened a lot of times, especially over this like 13, 14-year bull run that we're on in the stock market, well, it reversed, and it reversed quickly. I tell you what, Facebook started the week at 331, got as low as in the 320s, but rallied hard and ended up relatively flat, right at an area of support. We'll show this to you on the stock chart towards the end of the video, but ended at $330 per share. Now, I talked about how these companies are moving into their earnings season. It tends to quiet down a little bit from news, but from Facebook's perspective, boy, they had a lot of news this week. Now, they had an outage. This was back on October 5th, and it kind of timed up with another news story that came out, which we'll talk about here in a second. But basically a third of the world saw their Instagram, their Facebook, their WhatsApp all go down, basically because Facebook blamed it on some kind of configuration change. Now, Facebook is again asking to seek dismissal of an FTC antitrust case, calling for a divestment into not only WhatsApp, but Instagram as well. This lawsuit was brought forth by a number of, I think, attorney generals in a lot of different states. It was initially thrown out by a judge. The judge was like, I don't think you've got a good case here, but he allowed the FTC to rewrite the case and resubmit it. Now, Facebook, what they would like is the same kind of dismissal, but this time they want a dismissal with prejudice. So with prejudice means if you get a case dismissed with prejudice, it means that the FTC cannot come back and sue again. Now, I'm not a judge. I'm not a lawyer. I certainly didn't go to school and spend the kind of money to do that. I don't know what the odds of Facebook winning or losing or getting this dismissed with prejudice. I do know that having a judge initially throw out the case, probably a good thing. The other thing that I think a rather intelligent judge, which I think most of them are, is they would look at this and say, look, the FTC, the government approved of Facebook acquiring Instagram. They approved of this company acquiring WhatsApp. Just because things have gone phenomenally doesn't mean now we can, go back in time and say, oh, we approved you back then. We didn't know you were going to do that good of a job integrating the three companies to where we think now there's a monopoly. I think it's an absolute joke. That is my opinion. We'll see what a judge has to say, because his or her opinion, tell you what, will matter a lot more than my opinion or anybody else's for that matter. Now, Facebook suffered, there was this whistleblower that was on, I think it was like 60 Minutes, and then she got in front of Congress. To me, it all seemed a little orchestrated, okay? She's been leaking information to the Wall Street Journal. The Wall Street Journal's gotten a series of stories on this. And then she waltzed up in front of 60 Minutes and then got waltzed right into Congress, almost like it was like a TV show, like it was scheduled or something. Again, I'm not trying to float conspiracy theories around here. It just seemed all a little scripted, in my opinion. Now, does this whistleblower have some good points. Probably, okay, some of the products on Facebook probably are harming kids. Probably, you know, some of the political discourse and maybe the political anger that we're seeing, is it amplified by Facebook? It could be. I think you can make an argument there for it. I think the harder argument was what this whistleblower was trying to say was that Facebook's like intentionally doing this. Okay, I tell you what, if your kid's doing something that you think is harmful to them, is it your fault as a parent or is it Facebook's? You know, look, you know, and so we'll see what happens with this one. But to me, this was kind of a distraction. It created a small buying opportunity in the stock. We'll talk about it from a technical perspective. I'm not convinced that these stocks won't pull back further. We obviously have earnings on deck, and so we might have to wait a week to see what happens there. Now, moving on to Apple, start of the week, like a lot of stocks, about 141, about where it's trading at now. But this one dipped down into correction territory, but came all the way back and actually finished higher on the week, up to $142.90, nearly $143. Now, the EU is going to levy, or is trying to, they're not going to, they're going to try to levy antitrust charge against Apple over NFC chip technology. So this has to relate to Apple Pay. So you got your phone, you're at the grocery store or wherever you might be. I use Apple Pay a lot. Like, I literally never carry my wallet anymore just because the places I spend the most of my money at actually takes Apple Pay. But apparently Apple Pay is not very popular. There's not a lot of people using it. But one thing that the regulators over in the European Union want is this NFC technology. Apple has like a patent on that, or they're only allowing them to use it. They want them to open this up. I don't know where this would go. And considering how, I don't want to say unpopular Apple Pay is, but I think people thought people were going to use it more. I don't think this necessarily has a big, it's not going to be that big of a deal for Apple. Now, Visa, more on the payment side with Apple, Visa is drafting plans to reduce some fees with banks that pay Apple. So if you're not really sure how credit card merchanting does, and it's a little complicated, I don't even know how it all works either. But basically, you go to the store, you're buying something, and you pay with Apple Pay with your Visa account. Okay, it's being processed through, first of all, you got a merchant bank. So you got a JP Morgan Chase card, which is also has a Visa logo on it, and you're using Apple Pay. Well, all three of those companies get a little tiny percentage. And what the banks were worried about and kind of concerned about is on recurring payments. So I initially pay, maybe I pay for my gym membership or something. You can tell I really work out a lot over here. I pay with my gym membership with my Apple Pay, and then it's a recurring payment. Well, Apple was still getting a cut of each of that, and the banks were saying, well, look, maybe they get a cut of that initial one. Again, they are writing these fees out. These are in theory, and we'll see if Apple is cut out of future recurring payments. My guess is they probably will, but then again, I talked about how Apple Pay's adoption is way less than I certainly would have predicted, because like I said, I use Apple Pay all the time. I find it incredibly convenient, and I'm surprised more people don't. Apple is scrapping OLED displays in their iPad Air for now. So that was the iPad Air, pretty popular product. If you look and you compare iPads, the iPad Air certainly can be a good choice, especially from a price perspective. Well, they have LCD displays in there, but the OLED one is obviously a little bit nicer product, may cost a little bit more, but they'd like to put it in the product. They scrapped that for now just because of supply chain issues. Moving on to Amazon, start of the week at 3,247. This ticked under 3,200. That was a buying opportunity. And I will say, first of all, full disclosure, I own stakes in all of these stocks. And in fact, if you add up the stakes that I have in all these stocks, I'd say it's got to be like 70, maybe 80% of my portfolio. So needless to say, I'm all in on these stocks. Amazon's the one I'm particularly bullish in. This week, I bought some Microsoft. I'll show you that why from a technical perspective. And I bought Amazon as well, not in my own personal account, but in my son's account. I purchased Amazon and Microsoft for both of them. We'll talk about why from a technical perspective. Amazon's Twitch, which maybe you may not know, I think Amazon owns 100% of Twitch. I think they bought the entire website. Maybe there's some original owners that have some small stakes in it, but for the most part, Amazon owns Twitch. It's a popular, think YouTube just for like gaming. There's other stuff that goes on Twitch, but its main vertical is gaming. People streaming themselves playing games and things of that nature. So they confirmed a massive data breach. This had like how much creators earned in including money. It might have included passwords. It like included original source code. It's pretty massive breach, okay? We're talking about 125 gigabytes worth of data when we're talking about just text too. It's not like videos or anything like that. We're talking about just text. It's like the whole source code, the whole database of Twitch basically got uploaded. So that's unfortunate, but it takes more. Back in the day, I remember when the internet was first started, like your source code was a little bit more important because someone could take your source code and copy your product. Now with like a Twitch, it's more of its own brand. It's more of its own social network is probably a better way to say it. So even if somebody had a clone of Twitch, a clone of Google, a clone of Facebook, if you don't got all the people using it, like the source code doesn't matter. Whereas back when I was a kid and the internet was just being born, the source code had much more value. Now Amazon might argue that, but that's just my opinion. Now Amazon this is exciting. So Amazon opens its first brick and mortar store, a non-food store in the UK. Now they have these stores here in the United States, not many of them. A lot of them are focused in the Pacific Northwest where Amazon has their headquarters, but these are these 4-star stores. So it's all products that, or most of the products, the vast majority of them, number one are Amazon brands. So think Alexa and they have lots of basic brands. I mean, Amazon at this point probably has hundreds, maybe even thousands of their own private label brands. So they sell that in the store and they have 4 stars and above. You know, they got a 5-star rating on Amazon. These are products with 4 stars and above. And so it has books, electronics, toys, games. Has a mixture. Think like a mini Target almost is how these 4 stars work, and they adapt to what the community wants. So it depends on where they're at, depends on what kind of products they start bringing in. This is exciting, not because I think Amazon's going to get in the brick and mortar business and dominate. Here's how this is exciting to maybe even someone like you out there, and certainly someone like me who sells on Amazon. There will become a day when I, the Amazon seller, I have a product that I'm selling. I'm selling these plastic cases. It's actually what I sell on Amazon are these plastic cases. Okay. There'll be a day when I sell these on Amazon.com, but eventually Amazon's going to have enough square footage. They're going to have enough stores where they're going to take this product and they're actually going to put it on a shelf. So imagine that. You know, imagine trying to get your product on the shelf of Target. Like, how hard would that be? How much infrastructure you need behind that? Amazon's going to do it one day to where I'm going to send my products into Amazon and they're going to put them on the shelves there and they're going to use me. Okay. Instead of having to go through a bunch of middlemen and a bunch of distributors and have to handle all that. No, they're going to go to me. They're going to let me stock my product on a shelf. That's eventually coming to Amazon. It's still a ways away, but if that's eventually, that's the vision. I'm not making that up. I'm listening to, I go to e-commerce conferences and talk to the big experts, people that know way more about e-commerce than I do and are way more successful at e-commerce. That's what they say is going to happen. So I'm just kind of regurgitating what I have been hearing out there over the years. Now, EV maker Rivian, this actually broke last Friday, a little bit old news, but it broke after we uploaded the video on the FAANG Stock Recap Show. Rivian, which I think I'm saying that right, is another one of these EV companies, but they've got a major, I mean, we're talking about a major investment by Amazon. I mean, we're talking about hundreds of $1 million. I think Amazon is one of the largest shareholders. Now, with this IPO that is scheduled here pretty soon, I'll have to go through the S1. I've had some requests to do that. I'm going to go through their S1, see if there's enough to make a video on there, but I have read that Amazon owns a large stake in this. Okay. Now, will it be tangible to Amazon, which is like Amazon right now is a 1.65 trillion. Yeah. 1.65 trillion. This will maybe make a small dent in that. Okay. But if Rivian gets really big and Amazon never sells their stake, or they don't really get diluted a lot, which I don't think is possible. I think they're constantly going to be diluted here. Well, it could be a big stake from Amazon, but from a strategic partnership as well. Amazon's getting vans and delivery trucks from these guys, and I think that is where Amazon's going to drive costs down. So we're on deck with Amazon earnings just a couple weeks away. I think just to give you a brief preview of how I think they're going to go, I think they're going to be a disaster from a profit perspective. They've been offering to pay workers more. They've had to give bonuses. Okay, prices of fuel, prices of everything are going up. Prices to deliver items, especially if you're going through FedEx and any of those types of third parties, it has just been going through the roof. I think Amazon over the next 12 potentially even as long as 24 months, their costs are just going to rise and rise and rise. How are they going to push back down those costs? Things like electronic vans, okay? That'll lower the energy costs. Then you get more into robotics and you get robots delivering stuff and moving things around. That'll push things lower as well. And so Amazon might not look good on paper over the next 12 to 24 months. That could create some buying opportunities in the stock, short-sighted investors, but you got to imagine they're going to come out on the other end and drive costs down and be even that bigger of a company, and lots of other competition is going by the wayside. Very excited, obviously, but completely biased as well into Amazon's future. Moving on to NVIDIA, started the week at 201, wanted to buy this one, got close. It got down to about $196, $195. Almost pulled the trigger on this one. I didn't quite. Did I miss an opportunity? Maybe. End of the week at $208 per share. Now, NVIDIA acquires the formal verification firm Oski Technology. Not exactly sure if I'm saying that right. And forgive me, I've studied and watched a lot of videos about chips. I'm still learning about them. There's a lot of things going on here. In this case, this company, they've been working with NVIDIA for a long time. This company, Oski, has been founded, was in 2005. Basically, in a microprocessor, there's like billions, I think, maybe even like trillions of different things that can go on. This company actually tests that and enables NVIDIA to make their chips or have chips that are more efficiently made, more efficient in the way they run. I just see NVIDIA's trying to really vertically integrate their business, okay? They've got a great product. They have good marketing, believe it or not. They have great reputation within the cryptocurrency, which is in the gaming, data center, automobiles. They have great track record among that, and they're trying to vertically integrate and kind of stack their company up, create a moat around their business. That's what NVIDIA is doing, and I think they're doing a fantastic job making these smaller acquisitions. Now, the big acquisition NVIDIA is trying to complete is this ARM Holdings. ARM is a company that is licensing its technology to Apple, license its technology over to TSMC. I think maybe even TSC owns a small percentage of that license. And then they've got AMD as well. What NVIDIA is trying to do is take that ARM technology, which I think allows you to stack chips. So in the past, chips were like sometimes the motherboard, like your old school 90s computers had these big old motherboards. And now they're getting smaller and smaller because they're starting to stack the chips vertically with memory and CPUs, GPUs, things like that. And so ARM technology is one of the things that it allows you to do that. In fact, it goes against the grain what Intel has been working on. Intel's has been working on a certain type of chip for like 20 or 30 years now. ARM is kind of the new way, and we've seen Apple adopt ARM chips. AMD is adopting ARM chips, and NVIDIA is actually going to own ARM Holdings and be able to license that technology out. It's a $54 billion deal. They are having to twist and grease and do all kinds of stuff to get this deal done. And more recently, they proposed concessions to the EU. And we don't know what these concessions are. Typically, what it sometimes has to do is they sign guarantees, like we're not going to cut Apple off, or maybe pricing guarantees. Other times it makes it allows them to acquire ARM, but then they have to divest certain parts of the business. I don't know if that's how it will work with ARM. We'll see what happens. But here, we've got kind of a timeline here. The EU didn't provide details about the concession, which is typical, but sets an October 27th deadline for a decision. Okay, so the next step is either they're like, okay, we'll take the concessions. They're going to get feedback from competitors and customers. Okay, that's going to be Apple. That's going to be AMD. It may be Intel. It may be other companies out there as well. Qualcomm. And then the regulators in the EU will decide whether to accept the concessions, demand more, or start a 4-month investigation. Obviously, the best outcome possibly is they say, okay, we like your concessions, all done. You know, will politicians do that? I don't know. Okay, they might demand more. I don't necessarily think that. I think that's probably has the least likely outcome. And then they start a 4-month investigation. What are politicians great at? Okay, most of them are lawyers. Okay, they love investigating stuff and spending our tax money on all these quote investigations, which lead to not a whole lot of anything. I would say, maybe I'll be wrong about this, but I would say either accepting the concessions or starting a 4-month investigation would be my bet. Tell me in the comments down below what you think might happen. Moving on to Google, start of the week at, we'll call that 2,700, dipped down. Talk about this from a technical perspective, but end of the week strong. I mean, Google was like flexing its muscle like Hulk. Ended the week close to $2,800 on that one. Really nice comeback. Now, Google announced a $1 billion investment to support Africa's digital transformation. I've never been to Africa. I think it'd be super cool. Not necessarily South Africa, which is slightly more developed, I believe, than a lot of the other parts of Africa. I'd love to go to like anywhere in Africa, especially where civilization is not quite, has moved forward like the Western world. I think it'd be cool to kind of see that. And Google's kind of in there. They're kind of seeing, hey, Africa, probably out of all, I wouldn't say all the countries, but out of all the countries that need investment into technology, internet, Africa's probably darn near top of the list, and there's a ton of people there. And so if they can start transforming that economy, I mean, we're still probably looking 10. I mean, they've been talking about transforming Africa since I was a little boy. And so we're still probably 20 or 30 years away from that. But if you're going to hold Google shares over that length of time, could end up being a great market for them. Moving on to Microsoft. This is a stock I bought this week. We started at 286, dipped down a little bit in the 280s. I think that's where I got it in my IRA. End of the week at around $295 per share. Not a lot of news out of Microsoft. Finally, Tesla, from a news perspective, started at 793, but you can look at this graph. They didn't really have the downdraft. Yeah, this thing got as low as, 775 or so, ended 785. Talk about what this means from a technical perspective as well. Now, the big news out of Tesla this week is they're moving their headquarters. This is already official. Elon Musk, I think, bounced out of California like a lot of people have been doing, and they are moving to Texas. In fact, they've already set up in Texas. They're building a gigafactory there. They have headquarters in Austin, Texas, which I haven't been to Texas in maybe 20 years or so. And Texas has changed quite a bit. You have a lot of people, quite frankly, moving out here to California to places like Austin. So it's gotten a little less conservative. It's gotten a little bit more of kind of, quote, California, to the disdain of probably many people living in Texas. And believe me, I don't blame you. But one thing it is bringing in is investments like Tesla. And so they're going to be able to get cheaper land there. The income taxes are completely different, and the houses are completely different. So Tesla feels like they can move to Austin, has a similar feel, similar vibe to a lot of places out here in California. At least that's what I'm told. And you're going to be able to buy a house. If you have an engineer's salary, you're probably going to be able to buy a mansion. We're literally in Sunnyvale, California, where I think Tesla has headquarters. Like, you'd have to be a billionaire to buy a mansion. Like, that's literally what it takes to buy a mansion in those areas, or just boatloads of cash that you want to blow on a house. Tesla gains after knocking out record deliveries. Okay, like we talked about on last week's show, I said I was expecting these. They ended up coming the day after. Tesla just blew it out of the park. Q3 deliveries coming in at 241,000. 241,000. What I wanted to show you here with is Rivian. I wanted to go back here, and basically this company, and it's somewhere in this article, I can't really find it right now, but Rivian was expected to deliver, I think it was 20,000 vehicles in a year. 20,000. So this company is going to go public at probably a multi-billion. I mean, we're talking probably $8-9 billion valuation. They're going to deliver 20,000. That's their goal. They may not even reach their goal. Their goal is 20,000 cars. Tesla just delivered in a quarter, we're talking 3 months, 241,000 cars. And if you go to ask the Ford CEO, the GM CEO, the Toyota CEO, what are those guys saying? Guys, the chip shortage is so bad here, we can't even make the cars. We're going to shut down some plants and this, that, and the other. And no, Tesla just delivered more cars in a quarter than any EV maker is promising to deliver, quite frankly, over the next 2 or 3 years. This company is so far, and look, I don't always come over here and just drink the Tesla Kool-Aid, okay? There's a lot this company could be doing differently. They are absolutely, when you're talking about EVs, and we talk about it here on the show a lot, what kind of companies do you want to invest in? You want to invest in gold medal winning stocks, not the silver medals, not the bronze medals. Think about search engines. Could have invested in Yahoo. Could have invested in AOL. How'd those investments do? Okay. Invest in the gold medal winner, Google. Now you think about the EV market. Are there going to be a lot of silver medals out there? Rivian, Lucid Air, all these companies? Sure, there's going to be some silver medals to be passed out. Who's going to win the gold medal? Who's going to win the gold medal in EVs? It's going to be Tesla. That's the best investment. That's the investment where I would put most of my money. Would I put Rivian on my watch list? Would I put Lucid on my watch list? Sure. But guess what? Those companies are going to have to burn through billions of dollars before they reach any kind of sale, especially when we're talking in the same sentence as Tesla, where they're delivering 241,000 cars in a constrained environment where they could have probably delivered more from a labor perspective and certainly from a chip perspective. But I just think it's so funny that they had an absolute monster quarter. There's, I think, twice or three times as many chips in a Tesla than a Ford pickup truck. And yet Ford and GM are over there saying, this is just like old school CEO. Oh, anytime they can blame something on something, they'll do it. Tesla pushed the envelope and they got things done. That's the kind of company you want to invest in, okay? Moving on to Facebook from a technical perspective. This thing pulled back. I did a video earlier this week. I'm predicting we give back this whole leg. Now, it doesn't look like it at the current time. Okay, we pulled back to this 330 level. That is a natural level where Facebook pulled back, okay? But this trend is still down. Okay, in the shorter term, we made a low, higher, low, higher, low. Okay, over the last 4 days, you want to day trade this thing, but these candles are starting to shrink out just a little bit, okay? And so right here, we're on the knife's edge with Facebook, right at 330. You break below 330. Okay, we already did. We're coming down to 325. Get below 325, you're coming to 310. I know that's like obvious, okay? You get below a certain price, obviously it's going to go down. But when I say that, I mean the probabilities just go up and up and up, okay? Now we're sitting here at 330. If I was a betting man, I'll be in Vegas in a couple weeks. If I was a betting man, I would still bet this is going lower, okay? Because you have a low, lower, low, lower, low. We're still making lower lows on this one. But we're kind of right there teeter-tottering, okay? If we can get back above 340 on this one, well, I tell you what, I think we're probably back testing all the way back up into the 370s. So a good earnings report, anything like that could propel that stock. Now, Apple doing something a little bit different, but it pulled all the way back into our original actually our lower consolidation range between 138 and 143. So previously, we were between 144 and 150 on this one, and that was the range, okay? 145 was support, 150 was resistance. We occasionally broke out. Now we broke down. Now 138 is support, 144 or so is resistance. You break above 144, I think we're coming to 150. If we break below 138, hello, get your money ready. You're buying Apple down here, in my opinion. That's what you're doing. Moving on to Amazon. Amazon's completely different than all the FAANGs. It briefly broke out above, but then reported a pretty dismal earnings. And the stock is broken down and has retested 3,500 once or twice over the last few weeks, but has completely got rejected. Anytime you're south of 3,300 on this one, I got it, not at the low candle, but I picked it up this week in my son's account. Again, my son's got a few $1,000s. I mean, they're like 4 or 5 years old. They've only got a few $1,000, but dad throws them a couple bucks in this one because he thinks 18 years from now, he might want them out of the house. And so I'm saving up some money for them. Maybe they'll be able to buy their own house or buy their own apartment or something, like go to college or whatever. They start a business, whatever they might want to do. So dad's throwing some money into account, and we threw it into Amazon this week. Now, we've got earnings coming up with Amazon, and I've got a pretty good feeling that this company is going to do a ton of CapEx. So we're waiting to see how well, and we've also got new CEO, okay? We've got Andy Jassy. How well will he explain that to shareholders? I think Jeff Bezos, especially as time went on, investors gave him a ton of leeway, okay? If Jeff was like, yeah, we spent $30 billion in the quarter on CapEx and we'll do it again for the next 3 years and we don't care, basically, what you think. And investors were like, cool. Andy Jassy doesn't have the kind of swag and the kind of pull that Jeff Bezos might have had. So we'll see how well he communicates, because the CapEx is going to go up at Amazon. They're paying their employees more. They're hiring more people. Delivery costs, everything is just inflated in price over at Amazon. And so we'll see how well they, do that. If we break lower on Amazon, you got some great buying opportunities, I think, down here south of 3,000. Okay, that's if this thing really breaks down. You get below 3,000 and look out below, look out buying opportunity. Okay, you're not trying to pick this one off on the dead low. Look, over the last year, this stock has bottomed at $2,900, but it has literally sat there for a day. And there's like no one in the world, maybe there's like one dude or two dudes, but there's barely anybody in the world that got it at this low. You're not trying to do that, okay? You're trying to inch into Amazon because you know they're going to win a gold medal in e-commerce. You know they've already won a gold medal in terms of cloud computing. They're going to win a silver or a bronze in online advertising. And look, like I say, invest in gold medal winning stocks. The even better than that is win a stock that's going to win maybe 1 or 2 gold medals in other industries and then pick up silvers and bronze somewhere else. Okay. You got to love that. And in fact, out of all these FAANG stocks, Amazon's probably the best well-positioned to win multiple golds and multiple other medals in other industries. That's why I love this stock. I'm not trying to get on here and pump these up. Look, if this stock goes up 50% next week, it's not going to change my lifestyle. Same thing if it goes down 50%. These things could all go to 0 next week. You're not going to see my kids not eating. You might see me on screen crying because I'm upset about it. And I wish I had more money to come in here and buy, but it's not going to, I'm not pumping these stocks because it's going to make my life any better. Okay. I'm invested in these stocks because I believe in them, and I want to get you on that same page as well, whether or not you agree with me or you want to diversify into other segments. That you're this is the investor channel. It's not my channel. Okay, it's all of our channels, and I'm just trying to get you there along with me. Now, moving on to NVIDIA from a technical perspective, looking okay. Okay, we're doing something, we're flattening out kind of our uptrend. No problem with that. We're sitting right, reminds me a little bit like Facebook. We're sitting right at an area, okay, right at 207, 208, 209, somewhere in that range, where we can either get rejected later this week on this one, or we can pop back up into this range. I think all these stocks, even if we have great earnings, look, NVIDIA posts great earnings. Yeah, it might pop all the way up to 230, but I think you're going to see resistance there. Same thing with Facebook, okay? Could have great earnings, but we've got a heavy amount of resistance up here. Same thing with Apple. Could come out with great earnings, but you're going to have heavy resistance overhead. Same thing with Amazon. Could post great earnings, but it's going to move it into areas where sellers have just simply stepped in. Same thing with NVIDIA. This thing could go up, but sellers have stepped in here, okay? Moving on to Google, this thing corrected a little bit. Like literally, I drew this line in here. I didn't move this line right at about $2,700 per share, give or take $30, $40 when you're talking about a $2,700 stock. $30, $40 is kind of a rounding error, but we're right here and we bounced up. It looks like with Google, what it wants to do is we have this channel. And this is not that uncommon that when a stock breaks out of its channel, so we've got this channel, I've got these 2 lines. That's what they typically call a channel. Think like a river or whatever, or, a channel. And so imagine this is like water just flowing. Okay. Now the water broke the channel and it's spilled down here with Google. And what often happens is you back test to the bottom end of the channel. And so we'll see what happens with Google. A very bullish sign for Google was if this can get back in the channel. So next week, we get back in this channel with Google, okay? And we start hanging out above this lower trend line, okay? And you can move this trend line, you can move it lower, you can move it higher. It's more art than it is science. So that would be incredibly bullish. It would just, in my opinion, signal this was just a temporary fake out and this channel will still be intact. Now, the other thing that often happens in this case, and I think more often than jumping back in the channel, is we come back to the channel and we get rejected and we come back down, okay? And then where we come back down can create a buying opportunity. In fact, if we come back down here to 27, it's not that great of a buying opportunity. Wouldn't say it's like this. It's more of a longer term investors, because I think what could happen with a lot of these stocks, in fact, I think it would be incredibly healthy, especially with a Google, is go sideways for a while. Okay, go sideways, because the longer you go up, the valuation just gets stretched and stretched and stretched, and then all of a sudden you have some bad news, bad report, or just multiple kind of gets compressed a little bit. Well, then you got a long ways to fall. Whereas if we can consolidate for a while, allow Google to grow into its multiple, then all of a sudden we can start posting better reports, maybe get tailwind, maybe some other businesses lines start opening up, and then we can start a new uptrend. That's what we're hoping for, at least with Google. Moving on to Microsoft, talk about, I did pick this one up in my IRA account. Okay, my IRA account is my most important account. I don't need to get into it. The taxes, everything out here in California is super expensive. Okay, from a tax perspective, real estate and businesses are your number one and number two things you invest your money out here in California. Because from a tax perspective, that's your best investment. Okay, if I lived in Florida, if I lived in Texas, I've lived in any of these other states that have almost no personal income taxes or very low, it'd be different. Stocks, real estate, and businesses would probably all be in a line. They'd all be equal, okay? But I live out here in California. I have to invest my money in a tax-deferred account, and I do so in an IRA account. And so I'm limited to $6,000 a year, guys. I mean, look, I have other investments. I have other stock accounts, but for the most part, I'm limited, okay? Because from a tax perspective, it doesn't make a lot of sense to make it. And imagine taxes 30, 40 years from now. You think they're high now out here in California. Just wait 30 years. I mean, it's going to be ridiculous. So you're going to have to invest if you live in high tax states like I do, New York, California, there's probably a couple other ones out here in the United States. You got to be smart with where you're investing your money, okay? But for the rest of you that live in low personal income taxes, oh my gosh, the stock market could be better than even real estate and running your own business, because it's far more passive. And maybe I'll move to one of those states at some point, probably not anytime soon. Now, moving on to Microsoft, did buy Microsoft in the IRA, picked up a share of that, maybe looking to get a second share, because we pulled down, and I thought this level, we had this level marked out on our show probably for a couple weeks now at the 285 level. It looks like to me, Microsoft wants to wave out. What do I mean by that? I think we're in a new consolidation area with Microsoft. I could be wrong. We got earnings coming up. This thing could break up or break down, but in the shorter term, it looks like we're consolidating between 285 and 305. I certainly would expect sellers to step in up here at 305. If they don't, boy, I'll tell you what, you're coming to 320, 325, 330 on this one. Okay. Cause you know, once you break above this level, could be great things ahead. But it looks like to me, Microsoft pays a dividend, more steady company, will likely post absolutely phenomenal earnings. I think we're waving out here. It's a buy when it comes down here to 285. The other thing that I want to say is, out of all these FAANG stocks, I'm the most underweight Microsoft. So that factored into my decision as well. So if you're already overweight Microsoft, I wouldn't recommend buying it at 285. But when you're like me and you got way more money in Amazon, way more money in Apple, even NVIDIA, Apple, Facebook, all these companies, I'm the most underweight Microsoft, okay? And so that is the company I leaned on this week, and it could change week to week. I want to get more Tesla shares, and this stock, nothing has changed since last week. We are still in this channel, just like I showed you with Google. We are in an upward channel with this one. And you can adjust it week to week. We might be able to drop this, but for the most part, we're kind of in a channel like this. And we're looking to get above this 800 level. It's peaked its head on this 800. 800 is hard resistance on this one. In fact, I'm going to move this line up here now, because 800 is where we're at. We blew through this 750 mark. We're above 750. 750 is now support on Tesla, okay? A break below 750, you've got some support here at 727, 725-ish. I would actually see a break below that would mean we probably have wiped out this channel, and we're probably heading lower on Tesla. But right now, what the chart is saying is this stock is going to continue to inch up. The other thing that I want to mind you of is Tesla is reporting 12-day days from now on October 20th. But we already know a lot of savvy analysts can already back into the numbers. They know exactly how many cars they delivered in the quarter. They know exactly within a margin of error how much are going to be regulatory credits, how much are going to be Model S, how much is going to be Model X, how much is 3, how much is Y. They know that already. Okay, most people, most savvy investors already know what Tesla is going to report. It's if they come on that conference call and announce a new product, they announce better progress in one of the gigafactories they've got going in Berlin and in Texas as well. Those are the things that could move the stock up or down. But for the most part, the actual numbers probably won't move it much. You might have some forward guidance as well play into it. But last time I checked, somebody sent me an Instagram message today. Follow me on Instagram. I got links in the description below. Somebody posted me $6 gas down here in Southern California. Believe me, guys, we're going to $6 gas out here in California. Where you live, probably not, and I hope not. Okay. But people are going to have to, okay, I had no Teslas on order. Now we got $6 gas. I got 3 of them on order. Okay. And the first one's coming in 2 months, and I really can't wait. So Tesla is likely got a big old stream of customers in the pipeline, including the cars that I've bought. And I've talked to many other people. They're moving to Tesla vehicles, especially out here in California, because the gas is just way, way, way too expensive out here. Okay. And I don't think it's going to go down, at least with the policies and the things that we're doing right now. Tesla, I'll break above 800. Absolutely bullish. I still think the odds, I can't tell you, I'm not a bookmaker, but if I were to bet in Vegas, I think you've got way more than a 50% odds this one gets to $900, or at least very close within a margin of error there. We're certainly, I think, coming to 850, potentially 875, 880, 900 on this one. You break above 900 on this one, and I think you're darn near getting close, really close to 1,000. The momentum will just certainly be locked, and the sellers will absolutely dry up when you get above those levels. We're waiting for pullbacks with Tesla. If you stretch out the chart with Tesla, this is a stock that goes up and down, up and down. It has areas where it consolidates sideways. You either accumulate when it goes sideways, or you accumulate when there's worry, when there's, oh, GM's going to make some EVs and Lexus is going to make EVs. And I've been saying this for 10 years. And none of these companies are coming close to these delivery numbers for a year. For like 2 years, 3 years, 5 years. None of these companies are coming even close to this. And none of them are projecting it into 2022 or 2023. They're still trying to figure out how to make their cars today, let alone an EV, which they don't even have mass production of. So Tesla, great position. I think this stock is on its way to $900. If you can pick up a share, I think it might be worth it. That wraps it up on today's show. Again, I got links to my social media. I'd love to follow you. I'd love to have you guys follow me over there. And if you want me to follow back, just send me a message. Send me a message. Any questions you got, tweet me, DM me on Instagram. I will try to get back to you as soon as I possibly can. Have a great weekend. We'll be back again next week with lots of earnings videos, bank stocks next week. Those will be exciting. Good luck with your investments.